My Z community cuties, how's it going? It's me, Azizz, and today we're going to be talking about the RRSP loaning strategy. So before we start the video, make sure that you're zapping that like button, zinging that subscribe button, and gently tapping that notifications bell. Now, without further ado, let's begin with why you would want to use this RRSP loaning strategy. Now, maybe you haven't contributed anything into your RRSP yet, but you want to make use of its benefits, such as the deduction limits. Deduction limits actually is the amount that you can reduce your income by, which at the end of the day reduces the amount of taxes you pay. For more on the deduction limits and the contribution rooms, you could actually check out the RRSP 101 video that we made a while back, which should appear somewhere at the top of my bald. This strategy also works if you've already been making contributions into your RRSP, but you haven't yet done the maximum. And lastly, you might want to use this RRSP loaning strategy if you want to supercharge your RRSP and get to the point where you can use plans such as the home buyers plan or the lifelong learning plan a lot more faster than usual. Now, before we actually get into the strategy, I need you to know two things. The first one is how much income you made from the last year without taxes. And I want you to figure out what your marginal tax rate is. To figure out what your marginal tax rate is, you need to know what tax bracket you fit in. Now, tax brackets, they are a range. So tax brackets, how do I say this? Okay. Tax brackets are basically levels of a video game, which every single Canadian will fit in. For example, in level 1 of the Ontario world, your tax bracket would be anywhere from $0 to around $49,000. Level 2, on the other hand, would be anywhere from $49,000 up to around, let's just say, $60,000. If you guys would like, I'm actually going to put a link in the description below where you can see exactly which tax bracket or level that you actually fit within. This is super important to know, and we'll talk about how it comes into play later on within the video. The next step after figuring this out is finding out how much you want to take out for this RRSP loan. Now, keep in mind that with this RRSP loan, we're going to be taking advantage of the 60-day grace period that comes along with the RRSP. If you don't know about the 60-day grace period, it basically means that you can make contributions into your RRSP when it's 2021, but you can claim it as if you did it in 2020. But anyways, let's just say that you decided that you want to take out $10,000 of an RRSP loan. And let's just say that you're making $40,000 a year, putting you in the first tax bracket level. Because in this tax bracket level, the marginal tax rate is 20.05%. This means that you will automatically get a tax refund of $2,005. We got this number by multiplying the contribution of $10,000 by your marginal tax rate of 20.05%. Now, once you get this $2,005, do not spend it on anything. Pay off the RRSP loan that you just took. This will already knock off 20% of the entire loan. But what about the rest? Well, you can actually do two things. And the first thing that you can do is just set up automatic payments from your paychecks and pay it towards your RRSP loan. The second way you can take care of the rest of the amount is by actually taking advantage of the rest of the tax refunds that are available for you. Now, this is way far out of the scope of this video because if I talked about it, we would probably be here for an hour. But I would recommend doing your due diligence as to what refundable tax credits that you could look into. I'm gonna say that one more time in case you wanna Google or YouTube how you can do this. Refundable tax credits. Looking into this will actually maximize the amount that you get back when you're filing your taxes so that you could put more towards your RRSP loan. Combining both of these together, you'll pay off your loan much faster, pay less in interest as well. Now, let's just say you decided to only do the automatic payments. This means that you have about $8,000 to pay off your RRSP loan. Because most of the time these RRSP loans are paid back over 12 months, you're gonna have to divide this $8,000 by 12 months. This will give you around $670 per month, not including the interest. Now, this is only under the assumption that you wanna loan out the entire RRSP loan amount. But if you have an amount of money that you've saved up on the side, you can actually use the RRSP loan with cash together to supercharge your RRSP. So there's a specific formula that will help you calculate this. And again, you're gonna need two different things. The first one, your marginal tax rate, which you found out earlier in the video. And the second thing is you're gonna know how much cash you have saved up. What you're gonna do is split into three different steps with this formula. The first thing you're going to do is multiply the cash that you have saved up and multiply it by your marginal tax rate. If you've saved up $2,000 and your marginal tax rate is 20.05%, this will give you an amount of $405-ish. If you've saved up $2,000 and your marginal tax rate is 20.05%, you're gonna multiply that to give you, hold up, let me calculate this. So that gives you 401. A shout out to the Highway 401. If you know, you know. Now the next step is to actually subtract your marginal tax rate by 1. Now, because your marginal tax rate in this situation is 20.05, you have to first express that in a decimal. Throwing it back to some middle school maths, 20.05% will be equivalent to 0.2005. You're then going to subtract this number from 1, which in this case will give you 0.7995. The third and last step now is to divide 401 by 0.7995. This will give you the amount of an RRSP loan that you should take out in order to pay off everything within just a tax refund, rather than paying it off over 12 months. Now in this case, you end up getting around $500. Anyways, as we said briefly before, when it comes down to repayment of your RRSP loan, it's usually done between 9 months to about 12 months. And you were probably expecting this, but you're gonna have to pay interest for your RRSP loan. Now the interest rate that you're gonna be getting really depends on a bunch of different factors, which could include your lending institution, your credit score, which we talk about a lot on this channel, and a bunch of other different factors. Now, at the time of making this video, I actually pulled up the RRSP loan that Tangerine Bank has to offer, and it seems like they've got something good going on here. If you try to apply, they'll approve you within 24 hours, but the interest rate over here is 3.75%. Now, this is only under the condition that you have your RRSP with Tangerine Bank. If you don't and you just decide to loan out the amount and put it with another institution such as Questrade or another bank, then the interest rate actually rises to 8.75%. I actually like the Tangerine Bank RRSP loan because it gives you the option to either pay back the loan within 9 months or 12 months, which gives you that flexibility, but I'm pretty sure a bunch of other lending institutions have the same thing. But anyways, ZCommunity, let me know what you think of the RRSP loan strategy and whether or not you're going to use it. So that's pretty much it, ZCommunity. Let me know what you think about the RRSP loaning strategy in the comment section down below and whether or not you're going to use it. Now remember, zap that like button, zing that subscribe button, and make sure you gently tap that notifications bell. Anyways, ZCommunity cuties, thank you guys for watching. This is me, Azizz, signing out. Peace.